Our closer brought this one. We're talking about where to invest, and you like China right now.
I do, Adam, and the reality is that over the last couple of years, there have been a huge amount. You've talked to so many people on air here who have been worried about China.
Right.
Hard landing or soft landing. Well, there really wasn't much of a landing at all. And
It just kept going.
It just kept
flying.
going, yes. And the government there said back in 2008, we're going to stimulate the economy. They did a huge stimulus program. In contrast to ours, theirs really worked so well. They actually said a few years later, our inflation is so high, we're growing so fast,
right,
double digits, we have to slow things down. We're the second largest economy in the world. We have to slow things down. So they instituted that. People were worried they would overdo it.
Which they did. And I tell you what, Matt, why don't you bring in the chart here, and we're looking at the S&P 500 in white versus the Hong Kong, not Mainland, because it's tougher to buy Mainland stocks, but we're showing Hong Kong. And look at how Hong Kong's been lagging. What's going on, Mike?
There is so much concern, or has been so much concern over the last few years. It's a great intro, Adam, to this, because there's been so much concern about the Chinese are actually, it's a bubble. This economy can't keep going. The see-through building, 60 Minutes does programs on, and I've been going there for 20 years, and a lot of it has some factual basis.
And by the way, you're going to Shanghai in 2 weeks, so...
If the birds don't keep killing
If
people.
the birds don't, yeah. Right.
But the reality is that you've got the mainland stocks. You're well positioned this because the Hong Kong stocks have done even somewhat better than the mainland companies have traded way down. They used to trade at 2 and 3 times the valuations of U.S. companies. Now they're trading at a discount because of these fears of a slowdown. Mm-hmm. And when you have that and the concern that people have, and oh, by the way, because they stopped going up, all the retail investors in a very retail market, very much retail
driven. There's not much of an institutional
and
infrastructure.
Those people left and they went into real estate.
Right.
So you've had no bidders for that market for a couple of years. So the valuations are so low compared to any place else in the world that has a developed economy, that and they're growing at 8%. So we talked to the companies over there. The companies are growing rapidly. The market's way down. So it's a classic Warren Buffett kind of a buy them when they don't like them.
Which is exactly why you're going over there, going to Shanghai.